Hey traders, I still think the banking sector is still in trouble. I'm going to share with you why I believe that in this video. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, I see that trading course there right now. I'm actually giving you a free membership access to that trading course. So if you need help with anything at all, that's what the trading course is there for, right? If you're having mistakes, if you want to learn how the chart reading techniques, you want to learn how to actually trade the markets, it's all there for free. Just go get the help you need, okay? So I want to really focus on today on the banking sector, okay? And I'm not going to get into the fundamentals and so on and so forth. Let's actually see what the actual charts are telling us, because this is actually looking quite ugly when it comes to the markets itself, right? So the one thing I'm seeing here right now is that, look at this here. So if I go to my weekly charts and I squeeze this up, look where we're at right now. We are really at a really important point that if we do start to break this level, then we're probably likely to start to see a big move on the downside coming, right? So down and then across, we get that, and then we get a bit of a breakdown. Look here, look here, look here. Nothing but space. I think the next support level may be around that $22 level, right? That's with the $22 level there. But the banking sector is actually not looking quite good here. And so therefore, for some reason, there's something going on through here. But if I look at this, if I bring up now, let's bring up the 52 moving average. And this is something that I like to use. So I like to use, for me personally, guys, I like to use the 52 moving average. And the reason why I like to use the 52 moving average, if I squeeze my charts up, you'll notice that the best type of trades when I'm looking to go short or go long are when the market pulls back to the 52, pulls back to the 52, pulls back to the 52, right, going long. Or if the market's in a downward trend, see how it pulls back, look for a short, look for a short, look for a short, so on and so forth, right? So obviously I have rules around that 52 that I'm looking at, that I'm trading there. So I'm using that, and I have rules all around that. But what I'm looking at there, and what I'm seeing is that that's what's going on through here is a result of what I'm seeing in these markets here. So if we get the 52 coming down through here, and we do get something like this, and then we get a breakdown bar, then guess what's going to happen? We're probably likely to start to see this thing start to really have a really big move on the downside out of this there. And once we get that, hey, it could be even a shorting opportunity. So that's actually not a bad thing. It's like, oh my goodness, the market's going to crash. Just short it, right? That's a good thing. Crashes are good, guys, right? Why? Because the markets go down a lot quicker, right? They just fall off a cliff. All right, so that's what I wanted to do. Anyway, guys, that's a bit of a short update, short video for you today. I just wanted to focus on the banking sector today, that these banking charts are not looking too good. And if they do start to see more downside, which again, these longer term weekly charts here are not looking too good, because we're starting to go from a channel perspective. So that was the channel there, and we break down. And if we actually do, I like to call this the channel projected target. So if we do start to break past the 31, the 30 level, if we bring this back up to here, so we bring it back up to that $36 level, and then we come back down to say this $31 level, and we bring that down through here, right? If we do get that, then on a bare minimum basis, looks like that the projected target based off that channel is down there, right? So that actually could be a really good shorting opportunity from there. But then ultimately we could actually end up seeing, actually, what is that? Let's actually bring this up here. There's actually a lot of support and resistance around that $20 level there. So a lot of support and resistance. The 25 is the target, which also goes inside of all that resistance over there. Ha! Look at that. See that through there? I love how that works. Right? So we have, and what I'm talking about there is I'm talking about, see all this resistance, all that resistance and support back here? Well, that's actually the target for the channel as well too. So looks like if we do get the breakdown out of the banking sector, looks like on the XLF anyway, which is the financial sector ETF, looks like that we could possibly start to see a move down to around that $26 level. So the banking sector, guys, even though the stock market's starting to get it's slowly starting to get a bit of a bid to the actual stock market, the banking sector, on the other hand, is not looking too good.